Hi, you're watching Investor Insights. I'm Vic, and in this video, I want to talk about the myth of owning big companies in your share portfolio. Many textbooks, many guides, many financial commentators, whole bunch of lemmings out there will tell you if you buy the biggest stocks within your country's index, you're going to be alright. It's safer to own the big companies than to own the small companies. If in doubt, stick with the big blue chip shares. You should invest in these large companies because they've got the balance sheets, they bulletproof, and in America they're just too big to fail. Well, as usual, I use the same expression. It's a whole bunch of bull manure. Just because a company is big doesn't mean it's good. Or technically I should say, just because a company has reached a really big size doesn't mean it's a good investment. Size doesn't matter. The more important aspect that you should take into consideration before you buy a stock is the PE ratio, the growth prospects, which therein lies the forward PEs, the investing environment within that sector, the economy, both micro and macro. Yeah. There's so many factors. I can't tell you enough that just because everybody else is doing something means it's the right thing to do. And again, if a company is big, well, obviously it's less likely to fail than a small company, a smaller company or a medium-sized company. But in life, anything can fail. It either had bad management, which steered it to its doom, or it had a management which cooked its books and it never should have gone to its size, or it was a bad economic climate. Sometimes it's just bad luck. Let me give you some examples. Look at BHP, for example. 2 years ago, it was at $50. Today, $32. If you bought in at 50, again, I keep on saying the same thing. I don't know how many boxes of tissues you've gone through, because that's a hard ride down. And that's a lot of money just flushed down the toilet. You know, in time, it will come back. Perhaps not. But you don't want to take part in that ride down. Because BHP is the largest company in this country. And yet, to be down $18 or 36% in 2 years is a huge blow. If you were levered 2 to 1 in a margin account, you'd basically be down 72%. In fact, you would have had so many margin calls, you would have had your feet chopped out from under you. And it's just because it's big doesn't make it a good investment. Take a look at QBE, once the darling of all insurance companies. I think in the past 5 years or 10 years, I think it's been, they've made 110 acquisitions. Try and expand the insurance game. They try and buy companies from America, from Asia, all around the globe. Its stock, just 3 years ago, was $30. This went as low as $9.88 a couple of years ago. It's recovered somewhat. There's been a bit of bad luck through some SEC investigation back in January of 2011. But the fact is the stock is now still languishing in the 15s or maybe even 14s. Imagine jumping in at $30 and watching it go down to $9.88. Yes, it's recovered back to 15, but you've still lost half your money. And you should not be happy. The banks, at this point in time, are at their highs. You can say they're all-time highs. But their demise is coming. Because when, as I always say, inflation hits, and the central banks hike rates, and the housing market basically falls over like a deck of cards, these banks are going to lose a lot of money. And they're going to find themselves undercapitalized, just like the American banks. And if you own these banks right now, you should take a step back and think about paring back those positions. And in fact, it's not going to hurt you to leave those positions. You've made your money. If you can't see that it's a bubble, then you know what? You stick with it. But to get to the main lesson that I want you to learn from this video is that just because a company is big does not necessarily mean that it's guaranteed to succeed as a stock investment. Learn the climate. Learn about the investing environment. Do your research. And then you're going to see what's affecting these companies, how, for example, China is slowing down, so BHP being a huge trading partner to Chinese manufacturing firms, trying to sell all these resources, it's just going to get slapped around because prices are falling. You know? Not doing your research and acting like a lemming and buying something because somebody else told you it was big and it's guaranteed to succeed is a myth. And you got to dispel that myth. Don't believe it. Do your own homework and do things your way.